Good morning again. Right, so I'm doing a assessment of cable. Thought I might as well from scratch, because I am waiting for the Billy breakout, the 15-minute candle that starts at 8 AM UK time, currently British summertime, and finishes at 15 minutes past 8, and then what Billy does is trade the breakout to grab 5 pips. That's Billy TT on Forex Factory. Haven't looked at his thread properly for a good few weeks, if not months. He may be trading something different now, so always be aware that anything I say on these videos is just about education and not suggestions to trade. So looking at this monthly chart, all I'm looking for is for a candle high or low that may affect current price. I should say that if I was starting first thing in the morning, the pre-Frankfurt London Open, then I would be the very first thing I would do would be to look at this. See which are the best pairs to trade. Aussie US dollar looks to be the best pair to trade right now. I traded NJ. Apologies. That's my Billy Bar alarm call in case I've had a lay in. Anyway, getting back to this. So if I wasn't just trading cable or studying cable now, I'd be looking at the best currency pair comparison in order to choose my trade if this was pre-Frankfurt Open, but that's gone now. So I will look at this as well in trying to discern the direction of the 15-minute breakout. Cable is weak, Japanese yen is strong, US dollar should I say is strong, and that's the two pairs that matter in this instance. It's worth having a look at other pound pairs and see exactly what they're doing. If you choose to, but that can sometimes complicate matters. Sorry, I lost my thread there for a moment. So anyway, we'll get down to the basics. So we've done the assessment of the currency strength meter. We've looked at our momentum indicator, the RSI Histo Alert, and it's currently telling us we're just on a pullback. In terms of breaks and closes, technically speaking, I would want to break below here on this monthly chart to consider a pullback and continuation down. This is also quite important. These are a work in progress, these little inside bars, but you cannot deny that the most recent trend broken is this here. Low, high, high, low, high, high. That low has got significance because it created a monthly candle that has a massive wick. Hugely important. So that could be the precursor to attacking this and hoping to close below this. So it's a slight bend to my... Normally I would just discard that as an inside bar, but on a monthly you cannot, or should not, because on a weekly that'll be something significant, no doubt. So anyway, let's start drawing some levels. So we can draw a low on that. It's broken the low. That's significant. Broken and closed from a monthly low. This is significant for the reasons I explained. And it looks like this could easily pop up and test either the low of that candle, which is significant as well. Old support broken, gets tested as resistance. The high and the low of this candle are important to us because they have forced price up and down, which is shown by the wicks. We could draw, because this is a massive chart, we could draw something on the flip zone there, but what that will tend to be is potentially a weekly low and a weekly high. But we'll stick it in anyway, because price is nowhere near it, and it's good practice. So resistance becomes resistance again and acts as support. The open and close of the candles. We could draw stuff up here, but we're complicating things because price has got to get above these levels before it can even attack that, and you could say the same for that point down there as well. But this is handy because it will tell us if anything's been broken. If it's closed through it, then it's obviously a bearish signal. There's not a lot else I can do on this chart except to draw a descending trend line if we want to, just to remind us that this is in a downtrend. High, low, lower high, lower low. Critically, this has broken this, which validates this as a resistance line. Okay, prior to that, this would have been the valid resistance line. And we'll draw it in because we'll see it on the lower time frames. We'll see how price has reacted to it. Hopefully you're getting this now. High, low, lower high. Once this is broken by price, this becomes a valid trend line, which also then, as I've talked about in previous videos, gives us an indication of where we might be able to trade up to. In this instance, we would, if we were considering going long, because of this trend line break, then we would have had to have drawn this level in, this level in, this level in, and watch the price move through all three levels of resistance above. But I digress. So weekly chart, we can put levels above and below us that may cause a problem. This is a bit like Groundhog Day because I do these charts so often. We can clearly see we've got resistance here. We could put the price on all of them because they may well have gaps between them. That would be relevant to price should it collapse down to that level. The support levels are all catered for, i.e. the lows of these candles. There's none poking through there that might cause a problem. We could draw a support on that weekly low there because that's new. Price hasn't closed through it, so it could easily hold as resistance if price pops down. Nothing else of interest except this flip zone here ahead of price. We might as well put that in because it would be something significant on the lower time frames, no doubt. Price is testing that area now, this whole wick area here. That has obviously pushed price up. Quick glance at the histogram. It's telling us longs are the current bias for this weekly chart. Nothing else to draw on there really, in my opinion. Daily, starting to get interesting now because we've got tons of little levels in here. Daily high there that price is checking, testing, not closed through I don't think. We'll check that. In fact no, we need to check it now because that is significant. It's never get lazy. Close is 126246, and that level 126244. So it's closed through it. That's significant by 2 micro pips. That's a bullish signal. Price, as you can see, is collapsing now. We've even got the bust up, pull back, break and close of that high there. That's bullish. We talked about that yesterday. That was yesterday's move. So this has broken a level of resistance, closed above it. That's why, remember what I say, you break a level of resistance, you will most likely have a pullback. broken massive levels. What do we get? A pullback. So this is definitely a strong signal to the short side. Broken the low of that H4 candle. Clearly attacking the low of this H4, because low, high, high, low, high, 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 low, lower, high. It's an inside bar, but keep singing the song until it breaks and closes. Clearly selling in the market now. So I'm getting focused now, guys. This is why it's 8:04. This is why I do this stuff, to clear my head. I'm really getting a good feeling to the short side for this. H1. Remember the disclaimer, but you won't see this before I take the trade anyway. And you never trade anything that I suggest on these charts. Is for educational purposes only. Actually, I got that candle wrong. That's higher than that one there. So this is the critical level, the low of this candle. Oh no, I did get it right. I do apologise. The low of that candle is 6062. Low. No, I didn't. The low of that one. Yeah, I did pick the wrong one. There you go. Just goes to show. But it doesn't matter. Oh, my dog's on cue. So let's drag that on there. That's the reversal low that we must break through. Micro pip difference, but or 0.7 of a pip difference, but it's important. It's confirmed through there. It's also broken daily pivot. Now we've got to see what this has done. Has it closed through here? Crazy. These levels. This is the precise nature of this stuff, guys. The low of that is 5718. We should really whip to the open of this one, because that could have gapped down, which would be a valid signal to the south side. Open 5714. Did I say 5718? And let's look at the close of that one if we can. Sorry, these lines interfere with the... Oh, what a pain. Anyway, open or close, you always take the lowest number of the flip, the switch over. So this is a break and close. This support here has been broken, which would suggest a pullback. Remember, support once broken will create more often than not a pullback. The caveat to that is if you're in a very, very volatile time, which obviously we are now, the London Open, it can just go straight down without a pullback. So never assume anything, guys. Always use the tools in your toolbox. This hasn't closed green, which is very concerning. So that can still continue down. Now I need to draw my 15-minute candle. Here's the high, just behind that brown dotted line. And it's still going down, so I can't put a low on there. Obviously, if this high had broken during the candle, we've got 7 minutes and 26 seconds to go, then I would have to redraw that. So, once we have our high and low of the 15-minute candle, then Billy just trades it, unless it's too big. I think his caveat is 20 pips. If it's got more than a 20 pip range, he does not trade it. It's looking interesting to the long side here, because remember I talk about the rubber band effect. We've got the stretch effect from the hourly 8 EMA. Another quick glance at the currency strength indicator. Obviously, I don't know how this is calculated. I'm embarrassed to say that, and I'm not interested. because it works. So one day maybe I might look into it if I can get time. I should really do it, but as I say, if it works, why bother? So cable is showing weaker and weaker. Obviously I imagine this is calculated on some sort of distance from the MA, which would explain the further it's moving away from a given MA. I'm not saying it's the hourly 80 MA that they use here. The weaker the currency pair will look. And I imagine it's calculated across, well, it is calculated across 28 pairs, I think. So another note on the histogram, we can check these levels. For whatever reason, it might be an error in the guy who wrote it, but they don't go lower. That's the limit. You can't expand the chart and see where these go, but you can put your cursor on them and see what the respective levels are. You need to be careful because it does change, so you need to do it a couple of times, whiz around, come back to it. 51.78. Why is that showing 39? 57.29, that's just endorsed exactly what I said, and 58. So they've consecutively moved down, which is brilliant. If this had been lower, a lower figure than that one in terms of minuses, then I would be concerned that the price might be pulling back. Apologies, just in case I'm out and about, ready for the Billy Bar at 8:15. It's 10 minutes past 8 now. I wouldn't want to be really considering shorting this too much unless I've got a really good target down below, because of that, precisely that. So I would prefer to go long on this if I get the right trigger, and that would mean at least a 5-minute push north of the 0 line here. But it doesn't look like that. With vigour, not just something weak like that. With power, should I say. So that's it, guys. That's my assessment of this particular chart running up to the 8:15 Billy breakout. I'm going to upload this video and I might trade it, I might not. Thanks for watching. Have a good day. I'm going to go and make a well-earned cup of coffee. See you soon, bye, guys.